Hello everybody, Luke Gromen, FFTT. Hope everybody had a great weekend. I know here in Ohio it was a beautiful weekend. I was actually down in Cincinnati with my middle son, last tournament of the baseball season, or the summer baseball season. It was the Wood Bat Tournament of Champions put on by the Cincinnati Flames, which is a pretty well-known nationally baseball organization. Kid had a good weekend. Saw top-level pitching. I think 3 of the 6 games we played, he played. He saw guys throwing 88 miles an hour plus. So finished up 7 for 14, home run, triple, a bunch of walks, bunch of runs scored. So it's a good weekend. So a lot of fun. Got a little sun, so we're ready to start settling back into business. So with that, going to jump right in here. Thank you, as always, for joining me. First question comes from David C. Biden did not mention critical minerals supply chain in his electric vehicle push this week, or EV push this week. What are your thoughts? My sense is that the U.S. government and the DoD and the intelligence agencies are very focused on critical mineral supply chains, rare earths, etc., and regardless of what the president may or may not have said or omitted in any particular address. And so I'll leave it at that, but like I said, my sense is they are very, very highly focused on these supply chains. From Larry C. Update on your January 28th Weimar check the boxes tweet. I said on January 28th in a tweet, we're only 28 days into 2021, and we've already checked 2 boxes on our Weimar with U.S. characteristics bingo card. And I put in a passage from the book When Money Dies. It was, quote, "Gambling on the stock exchange had become the fashion, the only way to avoid losing all one's money and perhaps to add to it. Many new bankers were giving people advice, the flight from the krone governing all transactions. Meanwhile, the large numbers of unemployed, their passions fermented by the communists, are seething with discontent. A mob has attempted to set the Parliament building on fire." For me, in terms of where are we relative to that, and obviously that was in reference to what we were seeing with GameStop and AMC, and then also the Capitol, the events at the Capitol on January 6th. For me, I think history is continuing to rhyme but not repeat. I think the overriding theme is something that we wrote about in our flagship FFTT report on March 11th of this year, and then talked about at length with our friend Grant Williams on his podcast about 6 weeks later, mid-April. You can find that at his Grant Williams, I think grantwilliams.com, but at his podcast. And what we discussed and what we wrote about at length was the book 1931, Debt, Crisis, and the Rise of Hitler. And there's a quote in that book that I think sums up what we have been living through and are continuing to live through here today, which is that, quote, "the economically possible and the politically palatable were at war with each other," end quote. And so what's the update? Political tensions appear to be rising, not falling. Stock market continues to just chug ahead, moving up. Bitcoin continues to trade very much like the German Reichsmark in the early 20s, which was up massively through mid-April, then down big in the second quarter of this year on taper talk, on thought, hey, the dollar's going to strengthen, the Fed's going to tighten. This is right in line with any sort of sovereign debt problems, etc., and how the currencies trade. Now, we've seen in the last week and a half, Bitcoin find a bid again on presumably Delta, the Delta variant, and concerns about that. We are seeing, to my dismay, a shift towards authoritarianism in parts of the world where authoritarianism has been a foreign concept for a very, very long time. And I guess, as I said, that's a bit dismaying. And obviously it's being done under auspices of emergency. Then again, it is an emergency. Then again, it's always an emergency when these types of things happen, and so you need to be very careful. I would also say that some very, very big things are still very, very different now versus in Weimar Germany, and so I don't think that's the metaphor per se. That's why I say it's U.S. with some Weimar characteristics. The biggest of those is that as much as the political situation here is increasingly dysfunctional and tense, it is nowhere near as dysfunctional as it was there. You had massive. You had very high rates of political assassinations on both sides of the aisle. Annually, hundreds every year, car bombs, shootings, etc. So, God willing, it's never going to get that bad here. So let's, I want to be clear that It's U.S. with some Weimar characteristics and not the other way around. From JP, the only topic of relevance is why aren't you a Bitcoin maxi yet? I'm still very overweight Bitcoin. One thing I will say that I think Bitcoin maxis should pay some attention to is what is being done with vaccine mandates in heretofore non-authoritarian nations. I'm treading very lightly here. I'm not making a point one way or another. I'm simply saying that if they can mandate vaccines, there are other things they can do as it relates to Bitcoin that may also be very authoritarian and currently out of the realm of imagination. And so we may be getting closer to that part of the quote-unquote fourth turning where being diversified into both what I would call state-approved inflation hedges, which would be stocks, real estate in particular, as well as still holding lots of the non-state approved inflation hedges, which I would put in Bitcoin as number one. Gold, depending on who you talk to in the state, I think gold is a more approved globally, given what we're seeing central banks do with gold, a more approved inflation hedge than Bitcoin. But I think that's something, there's a great quote from, I can't think of his name, Sir Michael, I think Hintz, who said that you get paid for imagination. I think it's critical to have imagination now, both on the upside, but also, again, I think we have to pay attention. I think we have to see what's happening. I think we have to see things are happening that I never would have thought could happen 6 months ago, 12 months ago, 18 months ago. And I think we need to use what's happening in certain parts of the world and transport that across to finance, etc., just as to see if to check if that makes sense, to see if that could happen, to think about these things as risks that suddenly need to be hedged that probably didn't need to be hedged 6 months ago, 12 months ago, 18 months ago. So let's see. Next question. Luke, have you seen Russell Clark talking about cycles around food inflation with Grant Williams? And if so, any thoughts on that? I have not. We did write in a recent Tree Rings report that in the short run, the combination of drought conditions in the U.S. as well as flood conditions in some critical growing regions in China, along with ongoing global supply chain difficulties we've been seeing in a number of different areas, does seem to be setting up to support ag prices from a cyclical standpoint, from a tactical standpoint. But I've not listened to this podcast with Russell and Grant. It sounds like one I should. I continue to like farmland as a true inflation hedge, a true bond proxy. In other words, you can own tips, but you have to trust that the government's going to tell you what inflation is. And to be blunt, I don't. And that's not anything against our government. That's just any government throughout history, generally speaking, understates inflation as a matter of policy, particularly highly indebted governments. Whereas if you own farmland, your coupon, quote unquote, is going to be your rental rate, which floats over time on a lag with crop prices. So true inflation read. The land moves with the monetary base over time on a lag, true inflation hedge. And the other advantage of farmland is that if you CRP it, and I forget what CRP stands for, but basically the gist of it is the carrying costs are extraordinarily low. And so, for example, before I started FFTT, I owned about 100 acres of farmland as an investment property. I rented it to a friend of mine who farmed it. The taxes I paid on 100 acres under the CRP program were about $660 a year. So extremely low carrying costs. So that's I think that's of note of interest. From Max H, consequences of the Fed tightening into stagflation. Boy, it's an open-ended question, Max. For me, when I think about that question, the first thing that jumps to my mind, the easiest way, the cleanest way to play it is to be long volatility, because I think tightening into stagflation, you're going to end up with a slower economy. You're going to end up with some sort of deflationary or accelerating deflationary impulse. You could see some sort of a crash in markets briefly. The challenge is debt levels this high require increasingly negative real rates to keep the wheels on the cart, and tightening into a stagflationary environment runs the risk of taking real rates less negative or outright positive. And so, in my view, because again, this ongoing theme we've been harping on for years, which is the equity market now effectively is the U.S. consumer. It effectively is a key driver to the consumer, to tax receipts, to U.S. government tax receipts, and therefore to GDP as well, or to GDP and therefore to tax receipts as well. Any increase in volatility that hurts asset prices likely will force the Fed to do a 180 surprisingly quickly, as we have seen with increasing speed in the sell-offs over the last 3 years. And so for me, for those with a short-term 1 to 3 month investment mandate, I think it's a critical thing to try to keep an eye on. I think if you have a longer-term time horizon in terms of Fed taper into a possible stagflationary environment, if your time horizon is longer term, I think it's, hey, maybe you hedge with some volatility, but by being long some volatility. But I don't think you make a whole bunch of moves, because again, if you have a longer-term time horizon, I think by nature of how high the debt levels are, there's just not the appetite to have a sustained decline in risk assets by the Fed, by other central bankers globally. And then the last question for tonight from Mary C. North Carolina and South Carolina are huge beneficiaries of the flight out of the Midwest and Northeast blue states, but overcrowding and water shortages are appearing on the horizons. To what extent will rising taxes to fund an underfunded state pension and retiree health insurance discourage the flight south? Are pensions an issue? For me, and I think I'm interpreting this right. In my opinion, if you raise in taxes in the North, I think it's only going to accelerate the flight. Maybe you can raise them in the South to try to discourage some of that flight. It's something that might work, but it probably will be difficult to pass politically. But again, I don't have a lot of and when I say I don't have a lot of, I have no intimate knowledge of the local politics in North and South Carolina. So I don't know. I suspect they wouldn't like tax increases because most people don't. More likely, in my opinion, up north in these blue states are federal bailouts of these pensions, either de facto or explicitly. And I think we wrote about this in a Tree Rings a month or two ago. There was some provision in Biden's infrastructure bill, if I remember, or in the budget that sort of looked like a bailout for the blue states pensions, but wasn't a bailout for the blue states pensions. And I don't know if it passed or whatever, but that's the type of thing I would expect to happen. In terms of water shortages, I don't think anything is going to be a big deal from an investment theme in the immediate term, but I do think it's going to be more of a story over time. If you look at American migration patterns, over the last 20, 30, 40, 50 years, the story has been, in broad strokes, one of the populace moving from areas pretty close to carrying capacity to areas that either semi-deserts, deserts, or swamps that are, they were well above carrying capacity before, and now they're even more over carrying capacity. So there's always ways around this. I don't know if if the water shortage situation will become a bigger issue on an investable time horizon, next 2 years, next 5 years. So it's something I'm watching pretty closely. A lot of people would say, well, it's Malthusian and Malthus has been proved wrong. And maybe that's true. With that said, if Malthus has been proved wrong, I would challenge people that would say that. Then why do we need to be concerned about climate change, right? I mean, that's a Malthusian aspect, and just with much better marketing, I would argue. So at any rate, I've touched close enough to politics twice now, so I try to stay away from that. And with that, I am going to wrap up for the night. So I hope everybody has a great rest of the weekend. And in the meantime, as always, if you're interested in what we're up to, check us out, FFTT-LLC.com, for more information about what we're up to. And if you like these updates, our weekly Tree Rings product, 10 most interesting things, a quick excerpt on each and how we think it may or may not fit into current narratives out there, including our own. And we get a lot of great feedback on it. So hope everyone has a great rest of the weekend, and we'll talk with you soon. Take care, everybody.